Hey everyone, this is StockJanitor. Welcome to my Value Digger series. Today I will be talking about past reviews of the stocks I talked about. Also value digging several stocks that's attractive at current market. Also talk about my IPO portfolio that I opened for this channel. If you like the topics I talk about, please subscribe to my channel. Thank you for the support. And I have a Discord channel that I share a lot of valuable information. You're always welcome to join. Add my Facebook and WeChat. If you have any questions, ask me anytime. I'll reply as soon as possible. Thank you. So first, Root. I talked about this long time ago. It has a price divergence with Lemonade. So there's a huge market cap gap, value gap, and Root's financial is 4 times stronger than Lemonade. And recently, Lemonade has crossed around $150, so nearly doubled, and Roots only been up right now is like 18 bucks or something like that, 19 I think. But anyways, there's a huge gap. I talked about this in my previous video. So if you want more information, please review my previous video. Thank you. And then the second one is Desktop Metal. This is a 3D printing company I talked about in an earlier video also. Metal parts print around this big, and the market for these kind of metal parts is $1 trillion. So even if DM just get 5% of the market at a 20 PE, normalized PE, market cap should be around 100 billion. This is a really rough estimate, but definitely DM has upside potential. Uxin, this one I just bought for fun. Is because my friend bought at a very high price, and I don't know if it's reliable or not. I just bought it for fun. It's a gamble, so it's extremely risky, but I just want to talk a little bit about it, I guess. It's a second-hand car market company like Shift and Carvana. Also, shareholders are interesting. Singapore Sovereign Fund, 58 company, WUBA. A shareholder was a board of director for Uber and Burger King. So the shareholders are pretty interesting if you think about it. Now I'll talk about it here. So I bought around this circle right here. Let me make it bigger. I bought around here. $1 is my average price. My prediction was that it might hit here or even lower if it's really bare. And well, it didn't. It went up. It may go down again, but my target price is 1.4 personal target price. So this is a extremely risky play. It's basically a gamble. If I lose all my capital on this stock, I'm fine with that. So the risk is at your own. Please note that all stocks, are risky. So value digging stocks that I want to talk about this week. Shift versus Carvana. I never talked about this. They deal with second-hand cars, as you know. The market cap difference is huge. Carvana has a nearly 50 billion, as you can see. Shift has only 800 million. That's a really huge gap, right? Almost 50 times, 60 times. So there may be value in Shift, but you have to do your own research. Currently, I do have Shift, and yeah, I'm just waiting for a big, huge gap up. Second, I find these all attractive stocks. The price, debatable, as always. Rocket Company, online mortgage company. This is at a fairly low priced, so I bought some, and it's pretty interesting. long-term stock also. FUBO sports streaming, they do exclusive 4K. I understand that 4K may have a really small market right now, but as technology goes and becomes more efficient, every household will slowly demand for 4K HD. So this means that FUBO has a monopoly in this field right now, and it's an indicator that it has a advantage over other companies in relationship with the sports associations, NBA, NFL. So long term, I prefer FUBO than others, and I'm starting to build some position into FUBO. And Blackberry, this is a well, I guess it was famous at once, and then it fell big pretty hard. So this is a more of a cybersecurity firm right now. To my research, I believe it's top three, top two maybe. As everyone starts to use the internet a lot more, this is a huge market, and BlackBerry is on top of it. So right now it haven't gapped up yet. It just started, and I see a lot of new company in this field. But as the market matures, I really think there is a huge gap up. AYX is very interesting company. I made some research. It has a super great business model. The managed team is very strong, but the cons is it's a technology company, SaaS. It's a software as a service company. So if some new innovation comes and replace it, you know, it could be wiped pretty fast. What does it do? So it's basically a software subscription. It's like Excel, but a lot more sophisticated. And currently, I believe all its customers are enterprises, like investment banking, data companies. You know, it's paid service, but the product is just amazing, amazing. And next, I want to talk about dividends stocks. I rank them, you know, as my personal opinions, but they may be wrong. SPG and MO, I rank them first. So SPG, why? From the big, one second. From the big drop, the past year, 2020, the coronavirus drop, it never recovered, and it still didn't recover even to nearly normal. So it didn't recover as fast as other companies, and the price is really attractive. So if you buy now, and if it ever recovers, you will have more profit, right? And I do think that coronavirus will recover in the coming a year or two. And if you buy it now, it has like a 6% or 7% dividend. It's really high, and you can enjoy that dividend for a long period of time. So long-term investing, it's strongly recommended. It's outlets, you know, Desert Hill Mall in Los Angeles, a lot of big brand outlets, and it's a real estate company, so they do leases to the shops. And then MO, it's been a downtrend for actually several years, and it seems like it won't go any lower. And you know, it's right now at this price, it's like 8% dividend. That's really really high. And well, the tobacco industry might be, you know, pretty skeptical future, but I'm pretty sure it'll be there. Yeah, to me, it's just a great buy, and the quality of the stock is actually really good. The characteristic from my evaluations. So I find this really attractive. And yes, I have these two. I have almost everything I talked about in my videos. Next, AT&T and IBM. These have a good future potential, good dividend. I'm more bright about IBM's future, its current market, and its company position. I really like IBM, although I may be wrong. Third, AbbVie. It has a good potential, good dividend, yes, but I think the price is not as attractive as AT&T and IBM. That's why I put it on third. And Kroger, definitely it's a stable company with growth, but they do have a huge, strong competition, so I put it as third. Next, the IPO account I created. I didn't buy much since last video. I didn't even do anything to it. And I want to share my watch list that I plan to add into this portfolio. So you can take a look. This is a testing, you may lose all the money. I'm just sharing, put it as a content so everyone can see the research on IPO investing. This is all the stocks I talked about in this video. I don't have Carvana. Besides that, I think I have all others. Thank you for watching. If you like the topics I talk about, please subscribe to my channel. Thank you for the support. And I have a Discord channel that I share a lot of valuable information. You're always welcome to join. Add my Facebook and WeChat. If you have any questions, ask me anytime. I'll reply as soon as possible. Thank you.